Why should business owners not pay their kids as employees? You might have heard on the internet that a lot of business owners pay their kids as employees to reduce taxes. And today's question is not about why is that a good idea, but rather when is it a bad idea? Let's talk about the general concept so that you have a good understanding of it, because then when I explain when it's a bad idea, the answer will make more sense. Let's imagine that you as a business owner bring in $1 million, and I'm picking that because it's a round number and it's high enough to get into high tax brackets. So in the United States, we have a progressive tax system, which means for the first chunk of money that you earn, you don't pay any tax. The next chunk, you pay a higher tax rate. The next chunk, you pay a higher tax rate. And if we say, for example, you are in a 35% tax bracket, it doesn't mean you pay 35% on all of your taxes, because the first part is exempt, the next part is at a lower bracket, the next part is at a lower bracket. But what it means is the money you receive beyond the last tax bracket is taxed at 35%. And by the way, not only are you paying 35% to the federal government on federal income tax, if you're in a state with a state income tax, you'll also pay that percentage. And then there's a separate percentage that's being paid for payroll tax. I usually recommend working with a CPA to figure out how you should do this, but I'll give you the general overview here. First off, in order to have a child work for you, they have to be old enough to actually perform that work. So if they're 2 years old, they can't do most tasks. What they could do is model. So in other words, they could be a model for clothing or products that you feature on your website, or photos for other purposes that you feature on your website. So a child can be paid for modeling, but usually child wages need to be paid to children who are old enough to actually get the job done and do the work. And that's because the IRS says the amount you pay your children needs to be a fair market wage. So here's the scenario. Imagine you are earning $1 million a year. And let's imagine that your children can earn $12,500 per year without being subject to income tax. The standard view on the internet is, hey, why not take your $12,500 and pay it to that one of your children? That reduces the tax of, say, 35% that you're at in that bracket to zero. Well, it does, but there's something missing from the analysis. When you pay a child for doing work, although they don't pay income tax, you do have to pay payroll tax on them. And usually that's about 15%. What is payroll tax? So payroll tax is Medicare, FICA, it's all those withholdings on your paycheck. You remember when you got your first paycheck at your first job and you calculated your hourly wage times the number of hours you worked, and you realized, oh, I'm going to make this much money, and then you got your paycheck and it was this much money? The difference there is all those portions that were withheld and sent to the government. Typically, the employee pays about 7.5%, the employer pays about 7.5%. But in light of the fact that you're thinking about this in the same family, there is a tax savings for you, but it's not as great as you might think. So imagine you're in a 35% tax bracket, and now that your child is not paying any income tax on that, you've just saved 35%, but you have to add back 15%. Now, if you're doing the math, you realize, well, still 15% is lower than 35%. Why not do it? Here are the reasons why you might not want to do it. If you're not in a 35% tax bracket and you're in a much lower bracket, then the math may not make sense. There might be a small benefit, and there are some costs associated with paying your kids. First off, you have payroll costs, so you might need to pay a payroll provider or a CPA to handle the payroll for you, to pay out to the kids. Next, government requires that you file reports. In Minnesota, quarterly reports to the government for the payroll tax. And you typically have to pay in that payroll tax each quarter. So as you can see, even though there is some tax savings, it now becomes annoying that you have to start making payments and filing reports and paying somebody to run the payroll for you. Now, can you do the payroll yourself? You can, but you may risk doing it wrong. And the time you spent trying to figure out your state and federal payroll documents and all that's involved with the calculations there is often better spent running your business as a business owner. So typically it costs right now in 2023 about $50 a month to pay a payroll provider like Paychex or ADP to run payroll for you. And typically a CPA will do that for you as well. So to summarize, why might it not make sense to pay your children? Well, if they have other jobs, that money will now be taxed. Second, the tax savings may not be as significant if you are not in a high tax bracket. And then third, there are costs associated with running payroll. Thanks for joining us today. If you'd like to find out more, check out our YouTube channel. We have a lot of similar topics there. And if you have questions that weren't answered today, I'd love for you to submit them. You can submit them by email or by adding a question in the comments section below. Have a great day.